Check, check. 1, 2, 3. 1, 2, 3. Vocals look good. All right. What's going on, everyone? Good to have you here tonight. Welcome to the stream. We've got a great day ahead of us, great night, and yeah, we're gonna take a look at the markets, take a look at the week, see what we can find out, prep for the week as we always do. And did anybody see the? Hopefully, y'all had a good weekend and are ready to go. So let's go ahead and get going. I had to deal with some stuff. I was actually traveling this weekend as well, so gonna get back into the mix and let's take a look at the charts and see what we find. So this week, got an interesting week ahead of us, right? Oops, what happened there? So we have an interesting week. LP Trades, good weekend, brother. Good to see you. Good to see you. Kirk, how you doing, brother? Hope you guys have been doing well. Hope you had a restful weekend and are ready to go. Yeah, so we have a heck of a week. Last week was pretty heck of a week too, but we got a heck of a week now. Nivaz, Era, Sarah, hey. How are you? I'm doing good, man. Yeah, I'm doing good. Just having a good time. Getting ready for markets, excited to get back in. And yeah. Kirk Townsend, you aging backwards. Just when you work out and eat well, you just gotta cut out those sugars, cut out some bad processed foods and start to eat your vegetables, man. Work out, get some weights in, and that's the key to youth. That's gonna make you look younger. That's what I do, at least. I'm doing good, Navaz. I mean, it's always good when we get a chance to prep for the week and get a chance to come on with you. So appreciate you all being here. This week is going to be an interesting one. So Monday, Tuesday, Wednesday, everything's going to be in preparation for this CPI print on Wednesday. So they're expecting a year-over-year CPI to remain unchanged. So if inflation goes up, then we might see catalysts to move one direction or the other. If it goes down, same deal. We know that we're macro bullish until we see otherwise. So we're going to stick with that approach until we see otherwise. So key things on Tuesday. There's nothing on Monday. And whenever there's nothing on Monday, I like to check the Econo Day calendar to see what is going on in this particular week. So let's go over to the next week. How do I go to the next week? Today's calendar, maybe. Maybe it's not going to let me see it. Weird. Wonder why. Econo Day calendar. U.S. economic calendar. Yes. All right. So maybe it hasn't updated for the week yet. So hopefully it does that soon. I won't be able to see it until Monday, so we're going to check that out a little bit later. At least we know that there's nothing listed here. Stream is not smooth. Don't know if it's me or you. I'm not getting any dropped frames, Nivaz. So far I can see things pretty okay. Everyone stream okay? Everyone seeing everything's good? Is it just Nivaz and his internet connection? I don't know. Nivaz, but hopefully your internet connection comes back soon. It might be just a hiccup there, so no big deal. No big deal there. So LP Trades, have you ever heard of flexible inflation average targeting? I have not. I'll have to admit, LP Trades, I have not, but it hasn't impacted my trading either. But I'll have to take a look into that afterwards. Don't have too much time today, but I'll take a look at that afterwards. Okay. So again, Wednesday CPI. We've got FOMC statement on Wednesday. So what a crazy Wednesday it's gonna be. So when this kind of stuff happens, very frequently you're going to get a really choppy set of weeks, and you're going to see price return back to new week opening gap within the first couple of days here. After CPI and FOMC, Thursday and Friday should be a lot better, a lot smoother. So if you're new, you don't want to get meshed up or chopped out. You just kind of want to wait for FOMC statement and FOMC Fed fund rate release. You want to wait for those to be discussed. I don't know if the rates are going to be changed at all, but they're probably going to keep it the same. If we see a rate cut, that's when we're going to see the market go up even further. It's going to be a much larger catalyst here. Kirk says stream good here. Okay, good. LP trade scary stuff. The Fed is constructing monetary policy based on market inflation expectations. Oh yeah, okay, I see that. Yeah, I've definitely heard of that. I didn't know it was called. I didn't know it was called flexible inflation average targeting, but I have read that they're constructing monetary policy, thinking that maybe the new average is higher for longer, or maybe the average has come up to here and this is the new average. Yeah. So that's going to put a damper on a lot of Americans there, and people worldwide in general. But yeah, it's going to be a really interesting one. Thanks for bringing that up, LP Trades. That's a really good point. I had read about that and just didn't know it was called that. So this is going to be really important, whether or not the Fed raises rates or not, and whether or not what happens during that FOMC statement. Again, FOMC statements generally are a two-stage move. So whatever liquidity gets formed, I love these days where we have CPI at 8:30 in the morning, and then you have FOMC in the afternoon, because oftentimes you'll have this move in the morning take out any liquidity to the side that it's hoping to run away. Excuse me, can't speak today. You'll see that whatever liquidity gets formed here, sometimes that is used to clear out everyone who could have a position already, so that when the FOMC rate comes, it will kind of give a Judas swing and then head back upwards. Now, I've also seen it when this happens where FOMC is just a continuation, it just runs away. So this Wednesday is going to be a really, really fun day to trade. If you haven't traded it, be careful. Oftentimes it's a two-stage delivery, but it doesn't have to be. Sometimes it just runs off and it just keeps running off for the rest of the day. So we know that this type of structure oftentimes leads to like a Wednesday reversal or of something of the sorts, with a Thursday high, Wednesday lower high of the week, Thursday lower high of the week, and then Friday we reverse from there. So from a weekly profile, we know that Wednesday and Thursday are going to be key. So let's take a look at this on the weekly. All right, so weekly charts here. We know that this previous week we targeted this high, this high, and this high. This open, this high, and this high. We closed above that, and now we're waiting to see where we go next, right? So in terms of which way we're going to go, we see that the week has started off moving higher and then selling off from here. So what I want to do is make sure that I've got my new week opening gap ready to go. Let me pull that over so that I can see that on the new chart. I'm going to pull that over here, and somewhere around there is where the new day starts. I will pull that up a little bit further. I'm going to make these old ones gray so I can see them better. And yeah, it was last week was a little goofy week towards the end, right? We saw some movement to lower to take out sell stops to head higher, but we ended the week on a really flat end. So we're gonna take a closer look at what this means. So let me go grab that new week opening gap first. So I want to go take a look at, let's see, where's our new week opening gap? Is around here. So let's say, where is the 2117. Okay, so this is 17. So we have the close here. And then we have the open down here, right? The close is 19,031. So we have that. We're going to mark that on our charts. And the new week opening gap low is the open here, 19,026.25. So now we have our new week opening gap there. You see it on the weekly chart. We see that we've traded up first and then traded lower. So oftentimes what we're going to see during the first half of this week, we're going to see liquidity taken and then reversed back to new week opening gap. So this week, I think it's going to be easier for us to trade lower first down to maybe this down close candle and then trade higher, targeting those projection targets that I had projected the other day. I still think that there's room to trade higher, but I do think that we need to close this dynamic buy side imbalance, close that at least to get to this candle's high up here. And then we'll see if we hold this consequent encroachment of this wick up here. Same with this wick. I think we'll end up targeting this. Yes, it's possible that we sell off from here, but I am keeping the weekly momentum in mind in that I see that we failed to come back down to fill this breakaway gap. We traded down to this open, traded back up, and then we traded all the way back up on this one. So let me get rid of this Fibonacci here, though. It's kind of cluttering right now. Okay, so on a weekly perspective, I fully expect a retracement first half of the week, or maybe like a low of Wednesday, and then a movement back higher. That's what I'm looking for. If that doesn't happen, we might just see consolidation Monday, Tuesday, Wednesday low of week, Thursday high of week, and then Friday consolidation. That's what I'm going to be looking for, that weekly profile this week. If it doesn't happen, then it doesn't happen, but that's what I would expect moving into continuing a bullish, overall bullish flow. Now, if something really crazy happens, we could see a high, low, higher, high. If we see a big movement below this weekly short-term low, or even below this short-term low, right? It's not guaranteed that movement below this short-term low to take out this buy-side imbalance. It's not guaranteed that that's going to be a bearish flow. It's more important to see where you see intermediate-term lows. This one breaking will give you a break in market structure. So this low of 17,113.75 is far more important to me than this low, right, made during the past week. Okay, so if I see a displacement below this, do I think that it's going to be bearish forever? No. I think that it might come down to take this buy side imbalance, but I don't think that we're bearish just yet. So let's go down to a daily chart and see what we can find. So remember this fair value gap, we graded 20%, 25%, 50, 75%. So I'm expecting us to be able to trade further down this week, or maybe in the coming day, to target the lows below here, maybe to target the 50% equilibrium point of that fair value gap. So I'm looking for price to head lower first during the first portion of this week, head lower first so that we can head higher later. FOMC and CPI oftentimes will take out the intermediate term low or short term low that's nearby to head higher. So that's why I'm thinking, okay, well, even though we're at a super high, I'm going to start off with my macro monthly bullish statement here, right? Macro, I think we traded down to the monthly already, and it's time for us to trade higher. So we'll see what we get, though. On the daily, fractally, that would mean we would head lower before we head higher. So if we are able to, maybe we get down to the 75%, like 18,819 mark, if we're lucky. If not, we might see it head down to this 50% mark real quick, 18.885, and then drop below that briefly, wick back up, and then see that we have see that we've got a continuation in the week. Okay. Maysels says daily breaker block as well with a daily fair value gap as a draw. Are you talking about which side breaker? Because breakers can be bearish, breakers can be bullish. So Maysels, which side, bearish or bullish breaker, are you looking at? Because I don't see a like maybe low, high, lower, low. Is that what you're looking at? Low, a low, high, lower, low, and then a displacement higher here. So a bullish breaker. The thing is I don't oftentimes look for bullish breakers in a premium, okay? Or bearish breakers in a discount, right? So if anything, I would be looking to see, does this turn into high, low, higher, high, displacement lower? Does this turn into a bearish breaker is what I'm looking into. So I don't think so. I think that we have a continuation move to the upside, but then again, I've been wrong in the past. I don't know what's going to happen on Monday. I prefer looking at Tuesday and Wednesday's price action to get a little more confidence, but I'm framing it that I'm going to get lower prices first. So why might I be doing that? Okay, bullish breaker. Okay. Yeah, so I don't look for bullish breakers when it's in this high. You have to go back and study the breaker lessons. They'll give you the parameters as to when you ought to be looking for breakers. But I am looking at this section here, and I'm trying to understand, hey, out of this low to this swing high, what are the possibilities now that could happen? Well, we've known for multiple days that if this type of movement is very bullish, we will oftentimes not see price head too far below this 25% mark. Now, it hasn't even gotten there yet. So that's why I like a return to either the 25% mark or potentially the 50% mark. Now, let's say that I use, this is a little bit too low. Let's say we use the candle bodies instead. This might give us a little bit more accurate of a view. So as you can see here, when we break this, and I should probably go back to resetting this to my normal Fibonacci sequence. So actually, that's not what I wanted. Hold up. Let me just create a new one because it kind of goofed up there. Okay, cool. So here we go. So we see the 50% mark of this close to this high is down to 18,829. So I'm framing this that maybe we can trade down to this equilibrium. It would have to happen to also be this fair value gaps 75% level here. And then I would expect us to potentially head higher from there. But I like a movement down to this 50% mark. So I'm going to be keeping 18,829 on my calendar or on my charts. Okay. Okay, cool. Maysels and the find a fair value gap to support that support to go higher. Yes, very possible. If it's very bullish, we won't see it come down to the 50% mark. If it is so-so, then we might see it come down to the 50% mark here and then trade back upwards. So that's what I'm banking on right now, right? Yeah, I do see that's kind of why I do like I like this daily inversion fair value gap. That's the one that we had mentioned last week, right? This turned into a fair inversion fair value gap, which is a sell side imbalance, buy side inefficiency, linked with a fully balanced range there. So I could see us coming down to that 75% mark, and then immediate. I would like to see an immediate rebalance at that level. So yeah, I agree, Mazels. That's what I'm going to be looking for. If it doesn't happen, it doesn't happen. But that's one of the first things I'll be looking for there. So on a daily chart, that explains what we're going to be looking for: a trade lower to trade higher. And of course, on the 4-hour chart, we see a lot of movement down here. So remember this this 75% mark. There's already balanced price range around here, even though this is a buy side imbalance, sell side inefficiency. Yeah, I definitely could see us coming down to that daily inversion fair value gap. I like that a lot. I think that would get some more shorts in so that they can get squeezed later during CPI and FOMC. So, yeah, this week, that's what I'm expecting from a weekly bias perspective. I'm expecting us to head lower so that we can break away from this new week opening gap, head higher, and that would be it. Okay? So that's what I'm going to be looking for this week. There's nothing on Monday, no economic events. So it's not like they're going to have a lot of stuff here anyways happening on a Monday. In fact, Tuesday should be probably your core day to trade. There can be stuff happening on Monday, but there's not likely to have stuff happen on Monday. So you will get price action, but it's not going to be as volatile as Tuesday or Wednesday. I hope. Famous last words, right? So yeah, there's nothing really here to think about. Where things get interesting is when you see price start to head down to this bullish order block, or rather this down close candle in a premium. We need to see, does it respect the mean threshold of this down close candle? If it does, then we're in for a bullish run and expansion during CPI and FOMC. Okay? So I think that is from a high time frame perspective, you need to be able to use this to identify bias. What direction do you think is going to go in, right? So there could be a bearish case made, sure, where we've got a high, medium high. We haven't really had any, like, this is the only intermediate term low that formed, but we keep seeing highs taken out. Until we see a shift in market structure on the weekly chart, I'm going to continue with my bias overall that we are bullish, but we'll see what happens there, okay? So I think that is going to be all I'll be focused on today. Let's see. So it looks like there's I don't think I'm gonna buy any more of those 250K accounts. I've already passed 3 of them. So I have way too much funding. I just need to go to the performance accounts and slowly build them up now. But I like the 250Ks. It's gonna be pretty simple to parlay them up because of how much of a drawdown they have. Like, I think it's 6,500 of a drawdown. So if you've passed a few of those, congratulations. The 50Ks are a steal at $90, like a 90% off. Like, there's nothing better that you could do to find a firm that gives you 25% off. It's ridiculous. Or I guess 90% off overall overall contracts. So okay, so it does look like Apex has like about 2 days left on that sale, so I'm not buying anymore. It's fine. So I'm just gonna watch Monday. I'm not gonna be up early trading London. I don't know enough about what's gonna happen. Monday still definitely is a tradable day. I just don't want to be caught late on Tuesday before CPI and before FOMC. Okay. Maycells, question about Apex. What's the max 20%? Oh, yeah, sorry. I just saw your I'll respond to your comment as well. I saw your comment, Maycells. I will respond to that. And so there's a question on what is the max 20% flipping rule. That means I can flip 2 days or only one to be safe. And what's the difference between a small scalp versus a day flip? So, okay, so yeah, this is a really great question. So out of 10 trading days required, and this goes for like from the period which you last requested a payout to the current period, because it's going to change in the future, right? But right now it's every 10 days that you can go ask for a payout. So 20% flipping means 2 days out of the 10. What you can do is you could go down to 1 micro, you could buy and sell within a matter of seconds, and that's essentially a flip, right? You're just getting the days count to be higher at minimal loss. So I think you lose maybe like $3 or $4 maybe tops. And the difference between that flip, so for those of you who aren't familiar with it, when you pass Apex Trader funding accounts, you end up having a count on how many days you've traded, right? So I can show you, like, for example, if you go to your screener, I can show you, let me pull up the eval charts just so that it might be a little easier to show. Okay. So you can show something like this where you've got 4. So you can kind of see on mine, you can see how I have 4 days here. 4 days on this one that I've traded, 5 days on this one that I've traded, 5 days I've traded on this one, 4 days I've traded on this one. I don't think this is right. Oh, you know what? I know why this is right. This is right because these accounts got blown during the rhythmic issues, and they counted the days as trading days. I don't really care because I'm looking for passing them within 1 shot. So yeah, I think that you can definitely do the same thing. But this is where you see the number of days traded. So if you have 10 days traded, 2 of the days can be counting it as flips. So the difference between a flip and a scalp oftentimes has a set entry and a set exit, and it still follows a strategy. If you have no strategy and you're going in and out, well, I mean, as long as you can state your strategy, fine. Otherwise, it may be considered a flip if it's a small amount, right? If it's 1 micro, flip, that's what a flip is. So, let's see. So hopefully that made sense, Maycells, and the folks here. Question here says, how much equity are you currently funded with, bro? Now this number, again, I want to iterate. It doesn't really matter to me what this number is, but I have 1, 2, 3 50Ks, 1, 2, 3, 4, 5 150Ks, and 1, 2, 3 250K accounts. So I think that's around 1.4 million funded right now. But again, like, just like I put in my post though, it's a cool statistic to say, but let me see if I can find that. Where is it? Oh, here it is. So 5 days ago. Oh wait, never mind. Did I count that wrong? Maybe it's 1.6. Hold on, maybe I did that math wrong. 150 times 5 is 750 plus 150 plus. Let me make sure I do this math right. So 350K, 5 150Ks, and then plus 250, plus 250, plus. Okay, never mind. I have $1,650,000 in funding. So either way, it doesn't matter, right? Like what really matters, and I put this in a post a few days ago. If you didn't see it, I highly recommend you read this and make sure you understand that the real amount of funding that you care about before you reach the trailing drawdown on these Apex accounts is the trailing drawdown itself. This is the true size of your account, because if you blow this account, that's it. You don't have a shot, right? That's it. So you're done after you blow this. So instead of counting the total funding, which kind of controls how much funding, how many contracts you're allowed to have, or how many contracts you control, it is important. I don't want to discredit, like, people that say I'm a million funded. Cool, great. Sure. Could I trade the maximum number of contracts with that? Yes. Would it be a smart move while you're still trying to trail the drawdown up? Probably not. You want to be trading 1 to 2% risk, and this should be treated as your risk. Now, if you have a higher tolerance for risk, then go ahead and trade whatever you want. But I want to be a consistent trader. I want to be somebody who amasses wealth versus gambles and flips the switch, So hopefully that helps. Let me see if there's anything left on the weekly. We went through the weekly, went through the daily. We don't need to go really down too much into the lower time frames because we are going to wait to see structure form throughout the week. Now, again, Monday, Tuesday, I would expect for us to hover and reverse back up to new week opening gap. It's possible that Wednesday we take that move to go to the new week opening gap and beyond. But at the end of the day, I'm still macro bullish. We see the monthly chart here. We see that we've broken this all-time high. We see that we traded lower briefly, but we haven't gone any lower than that. We also see that we have this as our monthly long-term low, essentially. So here's an intermediate term low, intermediate term low. Let's see, this balanced out, rebalanced here. This did not really have anything to rebalance there. So monthly chart's a little bit more difficult to identify, but on the weekly chart, you can certainly identify an intermediate term. This is an intermediate term low because it's got a short-term low to its left, short-term low to its right, right? So when price goes below this, that's when I'll consider it to be shifting bearish. Here, all the way up, you never had an intermediate term low until you got here, right? So short-term low, intermediate term low, short-term low, short-term low, short-term low, short-term low, short-term low, short-term low, another intermediate term low, short-term low, right? Now, the thing is about this one, I kind of am looking at this kind of like an intermediate term low because it rebalanced this buy side imbalance, sell side inefficiency. So if price does really drift down well below this, I'm going to be paying attention to this because I know that, hey, there's a lot of PD arrays that it just broke, and there's a buy side imbalance here, and there's a couple of previous new week opening gaps along the way down there. So depending on what happens, I'm expecting us to head higher, yes, but we understand that there's retracements that must happen. Okay? So I think that's going to be it for the overall review. I want to keep this below half an hour. Let me see what other questions we have. Maycells says, let me go back over this YouTube. Okay, Maycells says, amazing. I'm at 4 days. So just to be safe, I can flip 2 days on this account and have no problem. I'm at 4,250. I'm going to play it safe to secure my payout. Flip 2 days and scalp the other 4. Oh, good. Yeah. Yeah. You should be fine. Definitely just make sure you don't flip more than 2 days, and make sure that for each of your trades that you can outline the strategy if you get reviewed. Sometimes you won't get reviewed, right? You might get approved right from the beginning. So, but just in case, it's worthwhile journaling your trades, right? Huang Van No. Hey, Johnny, long time. I've managed to pass a 50K account with Apex. Oh, awesome, Huang. Thank you for that video on passing the prop firms. I've just been on the micros, risking less than 0.25% 9 days in now. Yes, awesome. And Huang Van No, that is exactly like I've passed 50Ks and gone up to the payout amount very quickly before, but it's not sustainable for me. So I too, from the 50K account that I used to get to payout, I risked no more than 1 or 2 contracts at a time, right? And it just took a little bit of time, but with good setups, $60, $120, like, you know, maybe $40 and $80 at a time, you don't blow the account fast, which is really important on those 50Ks. So great job, Huang. Keep up those consistent growth, and before long, you're going to be able to parlay that stuff up pretty quickly. I have an account that's eligible for withdrawal now. I think the payout request period is over, so I'll have to wait for the next one anyways. But yeah, I think yeah, congrats, Huang. It's a really, really great accomplishment. The thing that I would recommend is so I'm taking out the minimum. Some people go through these accounts like butter. Like they just hit the, you know, 2,600, they request $2,000, and now their account's left at $500 before getting blown. It's really tough mentally, psychologically to build that back up. So what I like to do is I like to take the bare minimum, $500 out every single time I'm eligible, and then continue from there while I build up the other accounts as well. So I'm gonna be I was getting last week on Friday, I was getting a couple of the drawdown accounts that were in drawdown out of drawdown. So I think last week we took a 150K that was at minus 1500 up to minus 700, and then took a 50K which was minus 600 down to minus 227. So yeah, so that's good there. Jonathan Sung, hi Johnny, quick question. I have a Kelly number for optimal sizing. The MTDD is concerning though, as I need some drawdown space. Any recommendations? Ooh, okay, I see. Yeah, I think so. The trailing drawdown is definitely difficult to, it's a new concept, not new concept, but it's a difficult concept at first. So I think that with the Kelly number, I think what you can do for, let me think about how to put this best. I think what you can do is go figure out what your trailing drawdown is first. What I did. I'll how about this? I will give you what I did, and you can try to see if it can apply it, right? So go to your 50K account and go, like, you can actually go to my risk analysis video and download Excel sheet that helps you calculate how much of a drawdown you can get into. So let me see if I can find it here. Oh, can I not find it here? Dang it. Okay, give me 1 second here. I need to log back into something here. I think I'm trying to pull up this Excel sheet that I created just for risk analysis here. Where are you? Okay. Okay, here we go. Sorry, give me a second. Just logging into my other account so I can see. Where is that thing? Maybe it's here. Where is that tool? Where is my tool? Sorry, give me a second here, folks. I'm trying to find this. Ah, here it is. Okay, cool. So let me pull this over real quick. And let me close some of these here. Close that as well. Okay, cool. So I think that you can still use your Kelly criterion, but what you need to do is you have to use a tool that helps you understand what your risk is. And remember, you can go to my risk video. I think it's here. It's under the 2023 playlist here for new to futures trading top playlist. If you go to the fund account risk management video here, you'll find in the download link below and on this download link, you'll find that you can, you have to put in your email to download it just so I know that, I have evidence that you were able to actually download it. But then you'll get access to this thing here, which allows you to put in your futures instrument contact value. So like for MMQ, it's 0.5, like 50 cents. NASDAQ is $5. Number of ticks per handle, because sometimes gold is 10, oil is 10, NASDAQ is 4, EME and the S&P is 4. And then you can use what your maximum loss percentage that you're willing to take would be. And then this calculates out like everything here. If you want to like use 2% risk, this will change accordingly, as you can kind of see here, right? So you can kind of see what your max loss per trade size it should be. This is, I'm assuming that max loss for 1% on a 50K, on a 50K, right? Or sorry, 5,000, whatever the 50K's drawdown is 2,500, I think. I treat this as $25 here, right? So when I know what my maximum risk is, I can use backward calculation to figure out how many handles of loss equals this max loss amount. So I can then take a look and say, okay, well, for one contract, I can take 12.5 handle loss to equal my max loss I'm willing to risk. If I take two contracts, then I can only take 6 handles of loss before I've reached my level here. So I would recommend you use a tool like that so you and understand what is your account size, what is your trailing drawdown. I treat the trailing drawdown as my account size, because if you blow that, you blow the whole account, right? So Kelly criterion's another thing. It just like Jonathan Sung says, there's another strategy that gets used to identify the appropriate sizing for if you have like a 1 to 2 trade or like a 1 to 3 trade. What kind of sizing can you have? So if you haven't read about that, it's just another strategy that you can use. So yeah, hopefully that helped, Jonathan. So that is what I would do. You need to really be careful with the prop firms, because when you go to your prop firms, okay, so you need to know for the 50K account here, trailing threshold, as you can see here, is 2,500, right? So if your account goes down by 2,500, not 50,000, if it goes down by 2,500, you've blown the account, okay? So if you want to keep the account live, you need to treat that 2,500 like it's your lifeline, and you need to risk little enough so that you can maintain and win the account over time. It's not going to feel good with a 50K account's 2,500 trailing drawdown, because that means you have to use essentially one contract really at least when you're trading micro Nasdaq, since I'm primarily a Nasdaq and E-mini and oil trader, you have to risk one contract in order to make amount that is reasonable. So further down, if you scroll all the way down on this tool that I provided, you can calculate how many handles of profit is roughly. This is just a really quick list, right? Like if you have 10 handles and you use one contract, you're going to profit $20. 20 handles, $40. 30 handles, $60, right? Most people can probably find 10 to 20 handles a day pretty easily. So I would recommend, like, I mean, if you do that, just do some calculation, right? What's it going to take to hit your $3,000 goal? If you trade $40 a day on one contract, right? It's going to take you a while. So that is very, very difficult, and it trains patience, right? I'm not saying you might not have a windfall day or a day that you're going to make a lot more. Like someday you might find that you're going to find 30, 40, 50 handles. I showed a day recently where I showed 100 handles, right? So those days will cut this down, right? So if you have a 100 handle day, well, you're going to make $200 on one contract. And so that will greatly reduce the amount of time that you need to pass these. So that 20 handles per day on one contract, that is a very, very disciplined trader's way to make money. It doesn't matter once you grow your accounts so that they're large enough. When you grow your accounts so that they're large enough, then you can worry about higher drawdowns. Like even on the 250Ks, I only have a 6,500 drawdown, right? So if I'm going to risk, 1% of that, it's not a lot. Like I don't really get a lot to work with, right? So it's essentially like $65. So it's still more, but it is not a lot. So I would recommend you think about your trailing drawdown of your prop firm. It doesn't matter what prop firm you use. Most of them have a trailing drawdown type analysis. So daily max would be 300. Yeah, I'm not sure if what your daily max would be 300. Oh, I see. Daily max loss would be 300. You could. It depends on how many you took, but if you're trading something like Top Step, I think that has a daily max drawdown, or the Funded Trader. I think there's a couple other prop firms. Yes, there will be a daily max if you chunk it down into that many trades, right? And that would be the smart way to do it for sure. For Apex, which is the prop firm that I trade Apex Trader Funding. You can obviously, if you want to check it out, you can always. That's on my channel. You somehow made it to my channel anyways, right? So this link should take you over there, and there's a 90% off sale right now. Obviously, like, you can use my code, the DBVIBOHK code, or you can use somebody else's code. Doesn't really matter to me, but what does matter to me and anybody following me is I always recommend, if you're just starting out and you're like, maybe you traded stocks or options and you want to start thinking about trying futures, there's a couple of things that you can do, right? You can go to a free futures platform. I think Plus One futures. I think it's this thing here. Oh, nope, that's a home kit. Futures trading. Funded Trading Plus, Plus One coin, Plus One trade. Plus 500. This is it. Yeah. This is, I think, a free trading. And you can trade a whole bunch of stuff here for free, but this is probably something that, like, you could probably try to play around with for free. Otherwise, I tell people, like, hey, look, even on my streams, I use no more than 10 micros on a 150K account. On 50K account, I use no more than 2 micros at a time right now. So So you don't need more than what you're given on a 25K account. So I would recommend you are able to go and take one account and see if you can pass it first, and then reset it, do what you need to do, practice on demo, because you're given the ability to trade on demo sim accounts when you buy an Apex account. So yeah. Oh, good, good, good. So let me read up real quick. So I missed a couple of chats here. Let's see. Jonathan Sung, quick welcome, call it code number. Thanks a lot, dude. Okay, May cells. Thanks a lot, dude. Your analysis is always fire to line myself with. No, yeah, appreciate having you here, May cells. I love seeing your growth, and I can't wait for your success. I look forward to seeing your success. Okay, let's see. Jonathan Sung, 300. I love SMB Capital. Oh, okay, SMB Capital. Yeah. I think I remember this one because I remember seeing some people trade with this. I do remember this. So I don't know anybody that trades with this probably, but I have seen this mentioned. So I know that they're pretty legit. So let me go back to the Apex thing here. So let's see. I just got Jonathan Sung says I just got the 25K Apex eval, new to the prop game, but came with a different asset futures. Okay, great. Trading 1 micro at the moment. Yep. Yeah. So there's a couple of different strategies to pass the evaluation side, depending on how much actual like free capital that you have, right? If you have a ton of free capital and you know how to trade already, fine, go for the max and try to pass the 2,500 or 3,000 goal or 1,500 goal. If you're good at trading, you'll find your entries already. You'll be fine. Most people aren't good at trading already. Most people need some time to practice, find their entries, define their model, be disciplined and trade only their model, or look for trades that fit their model and then execute on their model, right? There's a whole lesson about that, but I think that there's a lot to be said for those who are seasoned and have the bankroll for it. That's when you can make use of these 90% off sales that are going on. You can go heavy on purchasing a bunch of accounts, and trying to pass them in one day is something that I do. I don't recommend it to new traders because it is very risky. You need the bankroll to be able to support that. Otherwise, you're going to blow a lot of money on it, right? So kudos for you for trading 1 micro at a time. Yeah. So, all right. So hopefully that was helpful. Again, like this week, I am looking for us to retrace a bit first. I would like for us, if we are fortunate enough, I would like for us to trade down no more than this 75% mark and then head higher, because 1, there's a daily balanced price range down here. 2, that would fit an optimal trade entry from the candle low to candle high. So I would like us to trade no lower than this here. Now, one thing to note on the real-time hour chart, right? What else is down there? Well, we have a few things. We have 25, 50, 75% mark. There's a real-time hour liquidity void waiting right beneath here, right? And then we also have, this is the CPI low here. And there's also the 18, this is a CPI high. So within this area, there's a sell side short-term low here. Liquidity void, I would like for us to take that out and then head back higher. So pay attention to those real-time hour gaps as well, because they are something that I refer to every single day. All right, good. Cool. Let me take a look and see here. What do we got? See, wow, there's still 7 people watching here. Thanks for watching, everyone. So, Cool. Jonathan Song, thank you very much, sir. Yeah, anytime, Jonathan. Hope to see you again soon. So I think it's gonna be it for today. I've don't see much happening in Asia. We see that we've come back to new week opening gap already. We went and took out sell side liquidity. Well, technically we took out the midpoint here. So we respected the midpoint of this tail and we traded higher. So I expect a lot of this kind of movement on Monday. I'm not looking for major expansions on Monday, but I do think that I would like to see us creep down if we're going to have a bullish continuation and end to the week. Siley, hey, thank you. I appreciate the love, man. Appreciate that. Yeah. Are there any other questions that I can answer before I log off here today? I'm probably going to try to trade Wednesday, Friday, and then I'll probably just personally trade on Tuesday, Thursday if I can wake up for London. I'm still getting used to London session. It's not easy. It is not easy session to trade. So for somebody who hasn't traded it frequently, right? New York, much easier to trade, much more volatility. London, you have to be really cold and calculated and very, very good with taking profit. So if you haven't practiced taking profit, London is a place where you do not want to be leaving a lot of stuff to expand and control go higher, because oftentimes you'll see that London creates a lot of the kind of sell stops or buy stops that get referred to the rest of the day. So this is my Ravenclaw mug. Got this from London. So Jonathan Sung, I hate New York Open. Mid London is my preferred. Okay, great. Yeah. I like London close as well too, Jonathan Sung. 10 o'clock to 11 o'clock I think is a phenomenal time. It happens to be somebody, one of my mentors, ICT, has a hourly gap there in this hourly session from 10 to 11 that I oftentimes see a lot of really, really good trades, more often than not, right? So yeah, Gangzhong, thank you. Yeah, anytime. Cool. So I don't see very many questions in the chat, so we'll see if our weekly our dip into a weekly expansion occurs. There's a small possibility that this initial movement higher to move lower is our weekly expansion, so I'm not gonna throw that out yet, but the larger move is going to happen on non-farm payroll and non-farm payroll, CPI and FOMC Wednesday. So I'm expecting a continually hugging of this new week opening gap on Monday and on Tuesday, potentially. Gangzhong asks, for day trading, what is your higher time frame? So I would say for day trading, I'm mostly intraday scalping the day, but if I am to hold for the day, I'm looking at key liquidity on the 4-hour time frame. Where are my external range liquidities? Where are my internal range liquidities? Where could we expand for? And then I'm looking on the 15-minute chart too to identify, okay, well, here's the range from the, where is it? Like around here. Let's say this is Friday, right? Here's Friday's open around here somewhere, right? And then when we go into the day, we see that it's expanded. There's sell side, buy side liquidity, sell side liquidity. Where can we possibly reach to next? So oftentimes it's the 4-hour combined with the 15-minute. Sometimes the hourly just as an initial check, but more than often than not, I switch from the 4-hour to the 15-minute, and then I execute on the 1 minute, 5, 4, 3, 2, 1 minute, 15-second, 5-second chart, depending on how fast and how liquid the market is. So it really depends. But for day trading, I would be at no lower. I would say no lower than like like no lower than 15-minute to identify exit liquidity, and then you can look at your entry anywhere from 5-minute, 4-minute, 3-minute, 2-minute, 1 minute down. But everyone's different, like do what feels best to you, do what you see the most setups form on, and go from there, because that's really key, right? What I see is going to be different than what you see. So what has to happen is you have to trade yourself and you have to learn yourself. I can guide you with what I'm seeing. And if you have a different bias than me, totally okay. I've proven it on multiple streams that you can have a negative bias, or sorry, a bearish bias. I could have a bullish bias. We could both be right at specific points in the day, right? And who cares if my bias is wrong at the end of the day? If I'm looking for key setups that could happen, one, I'll know if I'm offsides very quickly. Two, even if I'm offsides, I can find little scalps that allow me like 10 handles at a time, right? Scalping, there's this phrase I use that ICT uses actually, that's scalping protocol. I can find 10 handles in any one given direction. Doesn't matter if my bias is wrong. I can find 10 handles. And 10 handles on NASDAQ, full NASDAQ, which is 10 micro contracts on micro NASDAQ, which is what you see here, MNQ, right? 10 contracts on that, which is one NASDAQ contract for 10 handles. It's close to $200 there. If you get 12.5 handles, that's 250 right there. So it's a lot of money. So you can definitely find 10 to 12 handles every single day, any given direction, any day, all day. So that's what I do. But mostly Apex is intraday. I'd say it is scalping because you're moving on lower time frames, but people call scalping differently. Okay. It's 9:22. I need to get going to get ready for bed and do some other training. So with that, I'm going to close up here. Thank you very much for joining in, everyone. Hopefully this was helpful, and hope you have a good week. We'll be careful Monday and Tuesday, but once Wednesday rolls around, you should see a lot more smoother price action after FOMC and the CPI statements. So thanks, everybody. Have a good evening. We'll see you soon. If you wouldn't mind liking the stream, I greatly appreciate it. If it was helpful or entertaining, appreciate you being here, and we'll catch up throughout the week, okay? So Wednesday, Friday for sure streaming. TBD, I'll let you know if I'm going to stream London on Tuesday, Thursday. It just sometimes it's a little bit hectic on those days. So I'll let you know if I stream or not. But more than likely, just Wednesday and Friday will be the next days I stream, okay? I will keep an eye out for my community notes. I'll try to identify what I'm looking for on those other days, and we'll see if it happens. So thank you very much, everyone. Have a good night. Get some sleep, and safe trading, and stay hydrated, okay? Take care. See ya.